first of all, sir, thank you so much for agreeing to talk to us again and helping us learn again. And I think it's like the topic that we have chosen today. It's all the more important right now in the market. Markets have been they went through a big correction. There was a certain point of time up in the recent days where we felt okay, there is some relief coming back for the bulls, but again, the U.S. market ka inflation figures that have come today, there's again, it's very worrisome. And I mean, there is a meme in Hindi where a comedian says, "मेरे को ऐसे धक धक हो रहा है." So that's the kind of situation that's prevailing in the market right now. So I would love to have your take on it, sir. And of course, then we can, before we actually get into traders' mindset, current volatility, and if you can give us a hint on what can we expect from this, the figures that have come for U.S. inflation, that would be great, sir.
Okay, so good evening, all, and especially to all the drinker participants. So, as you rightly said, the current market volatility is something which nobody would have been expecting it, right? How many times you would have seen the US inflation is like in close to 8 or 9%. I think this might be the last time which we may see it in our lifetime. Okay, because the last time when people like and we're talking about 8 or 9, which is almost like in a 40, 50 years back, and none of us would have been there in the market, or some of us would not even have born. So whatever the things which you are witnessing now, maybe people say similar to 2008, we will be seeing a market crash. Yes, the market crashes do happen time to time, but every time it has a different pattern and a new set of things might be happening. So this time, it is due to the inflation, the amount of money that is getting printed, and other things. Many people have been saying it is all the loose money that got printed during the COVID times. Yes, that might be a reason. But again, whatever the things which was not happening in the last 10, 20 years, it's been happening now. Nobody would have expected in terms of the crude spiking, the gold falling. Usually what you will normally see is when the equity markets are falling, you will see the safe haven getting into the big one, which is going to be the gold. This time, for a change, all the equity, all the asset classes are falling in spite of like in the Bitcoin, which was touted to be the best alternative to gold. In case if there is going to be an equity market crash, the crypto is going to be the next big thing and people wanted to. But what is happening now is even before the equity market crashes, you are getting a symptom from the crypto market wherein it falls by 10, 20 or 30. At least here in the equity, we have an underlying asset. There we do not have to anything to rely on. But gold, which was supposed to be a best alternative, even that is falling. So now what is happening? Everybody is falling back on the dollar index now. So the dollar is getting more and more strength. And that is obviously like in making all the people who wanted to invest in the emerging economies and others, they are little worried. That's the reason you are seeing a constant outflow which has been happening on the FIIs. So now, what is the best way to enter or like and buy it in this market? As I keep saying to my mentoring participants and others, rather than timing it, like if you look at the Nifty P ratios, it has almost corrected from 40 odd levels to 22, 20, and whatever the levels which we are in. Will we be able to get an exact bottom on the Nifty PE levels? No. So rather than timing it, every 500 point fall, if we are able to have some capital, we can deploy 10% of our capital for every 500 like a point fall in the Nifty and then keep accumulating it. If you believe in India's long-term story, the best way to do it is just keep accumulating it. If you're not able to pick and choose a stock, we can always go on the Nifty Bs, the Bank Nifty Bs, or the Nifty IT Bs. Those are all the ETFs and everything which is available. We can look at that. Coming back on today's inflation number, I'm probably like in getting to see like in we are in the verge of getting to a near top like in a top in terms of the inflation data which is coming in. So people were expecting somewhere around 8.6 to 8.8. The last time which spoke the market again today, people who would have been trading in the US futures or you would have been trading in the SGX futures, you would have seen 1,000 point fall happening in a 5 minute candle, which happened to come. But what is going to be interesting is there has been a significant recovery happening from the bottom. So imagine from a market perspective, if the market believes this is the near top on the inflation number and we are not going to be seeing any more significant fall, and if the market starts to believe, no, from here there is going to be a turnaround because the Fed is going to tighten more, and already the crude which was hovering around 120, it has come down below the 100 mark. In case if it able to scale down further below 90 and 80, then we will get to see a significant rally happening. But people who are expecting a V-shaped rally similar to what has happened during the COVID period. When we had a significant fall during the month of February and March, we had a counter rally which was equally strong, and it was very strong, wherein we beat all the like an all-time highs and went significantly higher. Is it going to be happening this time? No, I'm not expecting that. But the only thing which can happen this time is you will see some rise and then you will see a significant fall. The market will get into more of consolidation phase, and you will see a lot of traders who thought the market is going to be following the same pattern how it has been done in the past. Those people will be getting wiped out. Even yesterday to today, many traders looking at the last 1 week, what they felt is okay, now the volatility is gone completely, the market is going to be going on an upswing. They already started giving a target of 16,800, 17,000, 17,500, and so on. But what market has proved in the last couple of days, yes, India is like an totally insulated from all these things. Like, in India is not even reacting, right? So whatever the things happening in the globe, we are not even worried, we just wanted to rally. But in the last 2 days, we have started slowly understanding no, 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 we can't be doing that. We also needed to join the global party. We can't be rallying alone. And then the Bank 50 and Nifty started correcting. The one thing which is going to be bothering our market, not only the crude, the dollar index. Anytime the dollar index, usually the historians or like anyone who would have been in the market, the economics say, whenever the dollar index has moved above 93, 94, you will see the FIs taking the money out of India because they are not going to be getting much. And that rule has applied, and the FIs have been constantly selling it, except the last 1 week or so, the selling has diminished a bit. But if you look at yesterday and today, slowly the FI selling has been like going on the rise around like $1,000 yesterday, another 2,000, sorry, 2,300 crores today. So the slowly the numbers started to picking up. That means the selling is not completely over. Always remember, whenever they create a near term bottom, they will be creating it on a big bad news. As of now, looking at whatever the things which has been happening, there has not been a lower circuit which has been happening. Yes, every time the market goes to a level where like in a 15,000 or the bank 50 going towards 32,000, we have found a bottom and then rallied. But to me personally, looking at the market, I'm not expecting that this is the current bottom which has been created. We may get to have a rally, and then we may have a significant correction towards the end of the year, later part of the year. And especially during the September, October, and November, this is going to be the month wherein we might see a significant move happening on the equity indices. Because whatever the things which has to happen, the post market, like in a postmortem and everything, will happen in the next couple of months. You might get to see some, what to say, someone defaulting, or some major bank going into a default, or some major brokerage firm going into default, and that will have a ripple effect across not only one market, across all the markets. So the next 2 3 months, you will start to see a significant volatility, and every rise, the market participants will use it as an opportunity to sell, because many people would not have gotten an opportunity to exit when the market went to 18K. They will all be looking for every bounce for them to get a decent exit. Yes, India is going to be a long term story, but if you are looking for a short term, the next 6 months to 1 year, if you're able to hold on as an investor, and if you're able to hold on to the quality stocks, next 3 to 5 years, definitely the reward will be much bigger.
Right. Thank you so much for that analysis, sir. That's beautifully put. Uh, I think we are already back to the pre-COVID levels already in this correction as well, sir. And still, it still seems to be coming, like you said. There still may be some blood left to let out. So, do you think, like you said, it's not probably not going to be a V-shaped recovery again, as it was during the COVID levels, and probably because the factors are very different this time.
True.
But yeah, yes, sir.
No, the one thing which we needed to look at is during the COVID era, all the central bankers, all the like in FMs across the G20 nations, and everybody were pledged to support the economy, whatever that is possible. Now, the same Fed and every banker, central banker is coming and saying, no, 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 inflation is the biggest worry, and we wanted to control that. If they wanted to control that, similar to last time, they're not going to be printing more and more money. This time, they wanted to like and take away the liquidity is going to be tight. When the liquidity is going to be a tighter one, imagine the bank interest rates keep going up. The amount of money that you wanted to go and invest in something, which is going to automatically, the drag will be there in terms of the like, and there will be less supply, and then the like, and the demand will also be like in coming down. Why the demand will be coming down? Because people will be hesitating and they will be wanting to have more cash with their hand, so that you do not know what is going to be the future. That uncertainty is what is going to be creating a lot of confusion in the minds of the investors now.
Absolutely, sir. Absolutely. Beautifully put, sir. So one more angle to it, which I wanted to kind of understand is, so US may inflation is on the rise, and 9% for US is kind of like mind blowing, unimaginable. A lot of concern has been around inflation levels in India as well, and the RBI's hiking rates as well. But at the same time, for India, a higher inflation rate is kind of the usual mark where our even up to 6% is kind of acceptable for us. So, do you think that is also somewhere impacting the equation, and that is also going to create some confusion?
Okay. So you needed to look at India and US inflation in a different angle. Imagine what is the like in a repo rate in India, it is close to 4.5. So for 4.5 to 7, this is like an at least a 2.5 adjusted rate and 3, that is okay. But imagine the US interest rates and where the inflation is. Okay, that is what is going to be causing a big concern now. 1.5, 1 to 1.5, whereas the inflation is coming somewhere around 9. If I wanted to tame it, if you look at 1980 chart of the like in the US markets, it will give you a clear picture. Just to get the inflation under control, they raise the rate close to 8% there. That is not happening now. These guys are letting it. The Fed is like waking up, but they are waking up too slow. They made a mistake and they are trying to correct it, but they don't want to commit a bigger mistake. That's the reason they are doing it slowly. There have been few articles which said the Fed has to done away with everything. They just needed to go for a 300 basis point, two times hiking 300 basis point. They know that is going to be like in troubling the equity markets once for all. They needed to do it and then bring down the inflation drastically and then focus on the growth. But I'm not sure whether Fed will be like ready to do like even for a 0.75. People are not happy with that. Imagine if the Fed is going to be doing 300, and that I'm not sure whether the Fed will be really keen to do that. But imagine the kind of inflation which we are talking about is totally unprecedented. Nobody knows how it will be reacting. There are like in the mortgage situation, the US like in the jobs data which has been coming in the last 1 or 2 weeks. It's not been like in so encouraging. Number of people who have been like in going out on what to say out of work is going to be increasing more and more, because naturally the demand, if it is not going to be much, based on that you will automatically start to see the attrition is going to be there and a lot of layoffs is going to be there. That's not going to be the good news, not only for the US but also for the India. And if you look at the TCS and the HCL numbers which has been coming in this week, already you can start to see the pressure. Okay, so the margin pressure is there, and then the new business like an acquisition, everything is having a little bit of a pressure, even from the best IT company, which is the TCS. That means if the large cap is having an issue, mid cap and small cap can also start to see that kind of inflow. And in the next 3 months, next 2 quarter results, you will see lot of excess. Whatever that got added in a lot of these stocks will get corrected significantly in Indian markets. Though the market may not correct much, or though the market may not fall much, you will start to see in the next 6 months significant fall or significant rise happening on specific stocks, which is going to be the scenario in the next 6 months.
Right, right. Perfect, sir. Sir, one more thing that I kind of want to understand is, so the recent this correction that we are seeing, this is of course a lot of money, hot money was pushed in by Feds and across the board agencies, and now that is kind of being absorbed. The liquidity is being absorbed by these banks. Do you
Right.
think there is some? So, is this the sole purpose, sole reason that this correction was bound to happen? That, like you said, brakes are being put in a little late. So is that the only thing, or are there some structural issues at play maybe as well? Because economy was closed for a long time, and some structural changes have been made which need to be corrected as well. So there are two parts to this question. One is excess liquidity the only reason that this is now happening? Of course, US, Ukraine, Russia war and all are there, but other than that, structural issues are there. And second is, will this just increasing the repo rates and all will be able to deal with this inflation situation?
Okay. To answer your query, a simple thought. What has happened to 2008 to now? In 2008, there was a Lehman crisis that had a ripple effect across the globe. India was not like in very much part of it. Still, we fell because the global market fell, and we also needed to take a brunt. And then we got the Satyam saga happening. But this time, did we hear any kind of an what to say crisis similar to Lehman? No, nothing. It is all in anticipation. People are anticipating. We haven't seen this kind of a rate hike. We haven't seen this kind of an inflation. We haven't seen crude going to this level. So what are they trying to do? Creating a fear, guys. In 2008, whenever this happened, we had a what to say a fall because of the Lehman crisis happened. Similar kind of a portrayal is being done, and when even though the liquidity is being taken out, imagine with the kind of money that has been pulled out of India by the FIIs, by this time we should have fallen at least 40-50%. But we are nowhere there. And last week, I believe the DAX has made a 52-week low, and we are not nowhere near to the 52-week low. We have almost moved 10-20% from that level. So, which is clearly saying there are certain markets which do not have the liquidity. There are certain markets which is ready to absorb liquidity and they are ready to move higher and higher. That means a clear divergence which is happening in across the different markets which is happening in the globe. And one more thing, each and every central banker are doing it differently. Say, for example, what RBI has been doing in the last couple of days. When they saw the rupees getting more and more weak, they're immediately announcing more and more measures to counter the rupee fall. First, they announced and you can get more and more dollars. The banks have been allowed to encourage more and more NRE deposits. Then they said, no, we can do other things as well. The FCNR rates and other things also being improved. There are a lot of things the RBI is trying to make rupee a stable economy. I would sincerely say, let the rupee fall whatever the level it needed to do it, rather than we control it and then we maintain it. No, we don't want the rupee to go beyond 80. When other currencies are falling, let us also fall, because imagine if the dollar is going to be gaining strength one day or the other. Before this also, when the dollar gained strength, they fell pretty hard. They almost went into 70 odd levels. At that time, our INR went to 40, 42 odd rupees. That really killed almost the entire IT sector and then the BPO industry during 2006-7 period. That kind of a scenario we should not be facing in the next 1 or 2 years, because whenever there is a vertical rise which is happening in any index, you can also see a parabolic fall also. So what I'm expecting is, if the dollar index is moving higher and higher, you can expect to see a similar kind of a fall happening either this year or the next year. When that happens, will our IT companies will be able to survive? Not only the IT companies, all the associated sector which is oriented and supported with the export and other things, all will have a ripple effect. When these sectors have a ripple effect, it is going to be affecting the consumer, and it is going to be not only affecting the consuming in a sector, it is also going to be affecting the real estate. When the real estate is getting affected, it will automatically affect the automobile and also the steel sector. So it is going to have what to say connecting dot everywhere. That is what is going to be my bigger worry in the coming year. This is not going to be only India. India would have done all the right things. But when these guys are having a pain, that pain is going to be getting reflected on our markets too. So the ripple effect, we may not see it immediately, but I'm expecting in the next 1-2 years, in case if the dollar is going to weaken from here, then it is not only going to be people will say the money is going to come into India. The money is going to come into India, but at what rate? Whereas we needed to pay salaries, we needed to have the overhead costs covered. All this will take a hit in the coming years. So it's going to be a couple of challenging years. And one more thing, which is a beauty about this market, is any excess, not only with the money which is getting come in, the people who would have come in the market in the last 2 years, all the COVID traders, imagine what they would have been thinking when they were entering into the market. They would have thought, guys, come on, going to office, working for 30 days, whatever the salaries which we get, sitting at home, I can make that salary in 2 days. But in the last 2-3 months, they would have understood it's the hardest money which we will ever be able to make. And some of the reasons is, some of them who thought, let me quit my job, become a full-time trader, they will have all been thinking, should I really quit the job now? Because the market would have taught them a lesson, and moreover, the portfolios would have gone down by in 30, 40 or 50%. Last time when the portfolio came down by 50%, immediately you saw a recovery happening. Again, it would have gone to 100 or 150 or 200. But this time, it is a painful process. Imagine a person who is in the need of money, and if he sees that the capital is getting eroded day by day, and his portfolio is rising by 5% and then falling again by 10%, then he will seriously think about getting an exit from the market. And there was an article which I saw yesterday or day before. the number of demat account holders who got created in the COVID period, it has come down significantly. All the IPOs which had a Gaha run last year, nothing is making any kind of a significant increases this year. No new major IPOs getting announced. So what is that news is telling you? The sentiment is absolutely poor in this market, and unless and until your name starts with Adani, you shouldn't even be thinking about listing it. So except name of Adani, none of the other stocks are moving anywhere. So Adani, no matter whatever it is, they seems to open up a new company every other day, and you get to see that the valuation skyrocketing. But that's not happening with all the stocks. So we needed to put that also in mind. Not everything that is going to be looking a rosy is going to give you a great results. I'm not going to be completely pessimistic, but I'm thinking and giving you inputs based on 5 years down the line, because it has given you significant rallies. So you cannot be keep having in a stock market which is giving you 100% rewards every year. To do that, the company also needed to make that kind of an progress. I'm not sure whether every company will be able to give a 30% constant growth quarter on quarter. That's not going to be possible. So all that is said and done, though the P valuations and everything is on the rise, we will see some stocks which is going to be correcting significantly. Almost like in all the IPO stocks have given more than 40-50% fall from the recent highs. You may see further fall also happening. And the next one important thing is whatever the sectors which has performed in the last bull run, not necessarily they will perform in the next bull run. There are sectors which are going to be cyclical, similar to the steel, similar to the pharma, and so on. So we needed to be choosing which is going to be consumer oriented, and something which will be like an as what to say as brave themselves in the previous fall and continue to rise. And telecom, and then the data analytics, or like in the automobile, or the future is going to be more on the electric and all these, right? So we needed to be looking at auto components and the ancillary sectors which is going to be supporting all these areas. So next 1-2 years, many sectors will see a drastic correction, but it will give you throw up plenty of opportunities for investors for the long term.
Right, right. Perfect, sir. And sir, you kind of already started my next question that was on my mind was the sectoral rotation that is about to happen. So there are two aspects to it. One is, of
Mhm.
course, you touched upon the sectors that you think may be good for the next 1 or 2 years.
Mhm.
But is maybe I had a doubt. Like right now, RBI is also increasing interest rates. Money in general is getting costlier. But
Right.
some of the sectors like auto and real estate have been doing well, and auto ancillaries,
True.
which
True.
kind of in a growing economy like India, it's a luxury. Uh,
Exactly.
so why isn't that a little contrary to what one would normally think? If interest rates are going higher, people would probably take less loans and buy less cars, something like that.
Okay. So our mindset, the millennial mindset, have completely changed compared to how it was used to be there in the in the past 10-15 years back. And one more thing is, India has always been an what to say a high interest rate economy. Except the last few years, if you'd have gone and looked at the history, we are comfortable with anything above 8, 9, 10. Only when it is going above 11, 12% interest rate, we are not comfortable. As long as it is around like an 8%, 9%, even when you're going for a home loan or a personal vehicle loan, as long as it is under 10, we are like an happy Indians. We are ready to pay that much of an interest and other things. That's the reason the RBI is having a cushion. Even though the inflation is showing up 7, still they are maintaining 4.5 to 5 and 5 point. Maybe this time they might hike another by 50 or 75 basis point. But as long as the inflation is under 8 or 9, I'm pretty sure RBI is going to be very much comfortable, because they know we have handled this kind of an inflation in the past. And Indians also, in the mind, they know, okay, I'm going to be getting, and what to say, I'm ready for this 8%, 9% inflation. What is the problem between India and US is, you are not getting any kind of a returns for the money which you have parked in the bank in US, but you still needed to shell out 9% on the inflation. But here you're at least getting 5 to 5.5%, and you're ready to shell out 7%. So the difference what you're seeing is around 1.5%. At this current juncture, this is not going to be major worry for India. And moreover, RBI knows it. Only factor which is going to be a major worry is the crude. And already the crude is imagine, I don't know how long these guys will be able to get it from the Russia the way they are getting it. But let's hope that Russia Ukraine war ends soon and then the crude comes back to the 60s and 70s, because currently it is not going to be auguring well for the Indian consumers, not only for the Indian consumers, for the global market as well. As long as this crude is not going to be hovering above that 120 mark, last time we went into 120, as long as it is not passing this 120, I still feel India is in a safe and a better spot, because India is more of like domestic economy rather than a large like what is it, except the IT sector. You can consider most of them are like domestic oriented sectors. Yes, there are few exports and other things which is happening, but as a country, we will still be able to manage as long as the crude, the major worry, doesn't cross that 120, the recent high which made.
Right. Perfect, sir. Okay, so this was a little bit about the questions, the queries that I had around the market. Of course, I've pinned a tweet on this space where I've asked the audiences to put up their questions to you, sir. We have a few questions, but let's get some more questions. Till then, let's get to the main, the thing of the theme of the today: traders' mindset during current market volatility. And it's maybe already touched upon long term mates. If you are bullish on India, I guess I get it. So then long term investors need not really worry about these corrections. But the swing traders, the scalpers, and especially you are the king of scalpers. So उनको ऐसे में क्या करना चाहिए? What should they do? If you have any advice for us, sir.
Okay, so let's get into the intraday trading aspects now. We discussed all about like and how the market is going to be and other things. So imagine if I'm an intraday trader, most traders like even in the last 2 months they would have found very difficult to trade. The pure reason is that what are the patterns which used to be like in the same pattern which I used to trade, it's not working now. Then in that scenario you needed to take a step back. What are the things which you are doing exactly? If it is not giving you the result, you needed to understand there is something, some pattern change which has happened and I'm not able to accommodate to that. In those scenarios, you needed to take a step back. If you have been trading with 100 lots, you needed to now trade it with 10 lots to see whether this pattern suits me or not, whether I'm able to get the results what I wanted it. Always remember, market is not going to be keep rewarding the same set of traders all through the week or all through the year. Every alternate month, like you will see a pattern getting changed. You will see 2 months like in the sellers making money, 2 months you will see the buyers making money, 2 months overnight players making money. Imagine the last 2 3 days. Yesterday the market literally closed it at the lows of the day. Today the market is opening at the highs of the day because almost a gap up, because yesterday night the US market rallied and we got a gap up. Imagine in the past you would have definitely made a lot of money holding your put positions. If it had been like in holding yesterday evening, you would have got a gap down today and you would have made a tons of money. But in today's scenario, the people who followed the same set of process, they would have been surprised to see market is opening with the 80 or 90 point gap up. In those scenarios, you do not know how to handle it. But during intraday, the fall happened. But as a trader, what you would have done? When you see a 50 or 60% fall in your like in a capital, then immediately you would have booked your loss. And then you would have thought, okay, now I needed to take a trade on the like in a call side, or like in the market is inching up, let me buy a future. But what, to your surprise, the market started tanking from the day's high and then it again closed it at the day's low. Now, the person who would have taken a position towards the day end of the day, you would have been thinking that, okay, the market closed at the day's low and the US inflation data also come in the negative. Now there is going to be a big, mighty gap down. Imagine, after the 600, 800 point fall, the Dow has recovered from the lows, almost 600 or 400 or 500 point recovery. By end of the day, if they are able to close it in the green, thinking that though the Fed may be hiking the rates, but I'm comfortable with the Fed like in doing it faster so that I can give a rally now. Because market is always going to be forward looking. So when they are going to be looking that Fed is going to be doing this, and if the Fed is meeting their expectation, the market is going to keep rallying it. What market doesn't like is the surprises. If you are thinking that you're going to be getting a 50 basis point hike and then the market is getting a 200 basis point hike, that is what the market doesn't like it. Or you are thinking about 50 basis point hike and the market like in the Fed doesn't make any rate hike, then the market again will crash. So market wanted something and you just needed to deliver it. If you are getting it, then the market will rally. Even today, why that was a knee-jerk reaction when the numbers came in? Because the market was expecting 8.6 or 8.8. When they got 9.1, that is like in totally out of the textbook. They panicked and then the fall started. Again, they recovered thinking that, Okay, 9.1. Maybe this might be the end of the peak of the inflation cycle. From here, the market is going to be rallying. So all these combination, the permutation and calculations, everything will be happening. And the big traders, the big money, wherever they are chasing it, and our job is to identify and then go. There are four set of traders. I will just tell you from a trader's mindset. There are four set of traders. Imagine the trader A, B, C, and D. All looks at the same chart, all look at the same data, but end of the day, there are one set of traders who make money, one set of traders loses money because they all look at the same way. But one goes on the long, one goes on the short because he thinks that the market is going to be falling. Another one thinks the market is going to be rallying. So same data looked at from two different perspectives. All we needed to know is who was having in control. Today, if there is like in a set of A, there are like in 70% of the traders who belong to category A, then those guys are the ones who are going to be dominating on whichever side they wanted to move the market. So our intention is to know where exactly the money is going to be flowing and how their minds are playing, and I just needed to follow them. If you are not going to be doing it, and if you think that you are the smart one who will be able to make the market move in the other direction, then we are wrong. So there is always going to be like in a one set of traders who's going to be making money, one set of traders who's going to be losing the money. We needed to know which one is going to be making the money and then just follow them according to the trend of the day. So if you are a trend player, if you are a trend player today, even today, the market was giving you a clear sign. If you have just followed the Bank Nifty, from the morning itself, the OI data was clearly suggesting it is going to be a bearish day. And top of it, we got the open and high, which is a concept which we use it for like an intraday scalping. We also got the open and high on the put side, which also tells me that there is a possibility that the market is trying to go and hit that number on the put side. So with all this, I was never long today. I always wanted to look for an opportunity when the sell is going to be coming in. So around 10:15, we got the first fall happening. Below the VWAP, the market was falling. Then that is the time for me to accumulate some position. Then the next one, around 12:31, the clear trend started emerging. And before that, the Dow futures, which was trading at around 100 points, it quickly crashed to flat level. So immediately triggered a big sell-off in our markets. That's when the Bank Nifty started falling more. And then you can clearly see the OI data, which was clearly getting added more and more on the call side, which was suggesting that the writers are coming more on the call side and buyers are coming more on the put side. When I know I am a buyer, then I needed to be there on the put side. If you are a seller, you needed to be there on the call side. If you'd have been doing opposite, then you are in the opposite camp, you tend to lose the money. That's exactly the simple game which we needed to follow and then stay light.
Right. Perfect, sir. Perfect. Absolutely brilliantly explained, sir. Sir, in this same thing, would you have something on some changes on the risk management side, maybe as well? Any changes in target stop loss in the current market or in any
As I
other way risk management?
Yeah, as I told you, if you are like, and say for example, there will be a days wherein in the past you would have got a result. The same data which is not giving you the result, then that means instead of going full throttle of your 100%, I will cut down to 10 to 20% to see why am I not getting the results which I was following in the past. Why am I not able to adjust to the current market pattern which has been happening? Always remember, it is like a habit which has been taught by the market to you. Market always tells you, Shiva, you needed to like and buy it at this level, you needed to average at this level, you needed to keep averaging at this level. This is your stop loss, get an exit. So you would have followed the same pattern for several days and weeks. But today, if you would have followed the same pattern, the market would have been doing the opposite, complete opposite. You would have averaged, market falls further. You would have averaged, market falls further. But the bigger mindset is, are we okay with accepting the loss when it is reaching a crucial point wherein, okay, I'm ready to lose 1:1 and I'm just going to be booking my loss. But what will be the mind and your monkey mind will be saying is, rather than losing my trade, in the past, I know this is the level at which it would take a support and it will move further. In that process, what you will do is, earlier you would have been deploying only 20% of your capital to go on a winning trade. In today's market, what you would have done is, instead of not only deploying your 20%, you would have deployed the remaining 80% also, thinking that somehow it is going to be taking a support at this level and it is going to rally. That is the biggest mistake many traders do. What they do, they gain small, and then when they are losing, they lose big. I'm okay with as long as the stop losses doesn't like can cross beyond 2 to 3% in a single day. You make 1%, if you're losing 2 to 3% on one fine day, that's absolutely fine. But what is not fine is losing 20 to 30% in a single day or 50% in a single day and then trying to recover, doing a revenge trade, doing trading, which is not going to imagine the same scenario would have happened to many traders who would have blown their accounts today. Why I say they would have blown their accounts? They would have positioned themselves for a big gap down. Because yesterday the data, everything towards the late end was showing like a market is going to be like an having a gap down. But what market did is completely surprised and gave them a gap up. The people who would have taken an overnight position, they would have booked a loss on the put side first, and then they would have thought this market is going to rally because the crude has fallen 7 8% yesterday, and this market is going to rally. Now they would have bought a Bank Nifty call, thinking that this market is going to rally now. 80 to 90% of the retail community would have thought that this market is going to rally and they would have bought a call. What the market did? They said, this is the top, from here we are going to be falling. And they didn't do an immediately quick fall. They were grinding the market in such a way they wanted to take the market lower in a slow and a steady pace. Why they needed to do that? Because at every level, you will see the retail coming and averaging their position. And they wanted to give a hope also. The guys, you keep averaging it, around 2 o'clock, we will try to do a rally. And everybody would have been kept on averaging it. When they would have given up the position at around 2:45 or 3, when they know, okay, tomorrow is the expiry, and with the current IV levels, I'm not going to be getting making much money. Rather than holding my position for overnight with so much volatility, let me exit my position of my call side. If they would not have exited, looking at what has been happening in the US market now, they would definitely be not getting any sleep. So this is how the trader's mindset is going to be working in this current market environment. Imagine you being a scalper. All your actions is going to be within like 10 15 minutes, maximum 30 minutes. Nothing beyond that. And you know, whatever the good or bad which is going to be happening, if you're going to be sticking with the discipline, okay, this is what my risk reward, I needed to accept it 1:1, and I needed to exit the position no matter whatever happens, then you will always be in the game for a long run. If you do not accept it, and if you feel, no, I can fight with this market and I know how I can get it back on the same day, that is when we as traders we lose it. Not only the intraday profits or loss which we make, we tend to lose more than 10 20%, 30%. Some of them even blow their accounts. So this is something which they needed to avoid it. Understand the current market, if it is not rewarding, don't try to fight with it. And the most important thing, many traders, if you feel that you needed to earn every day to run your family, pay the bills and other things, this is not the profession which you needed to be in. Trading is something which I always felt, if you have excess capital and if you wanted to just try to learn and then do, earn, that can support for your future, that can be like an additional income for the future, that always helps. But if you think, I needed to run the family by earning, then it always disappoints you in the long run.
Right. That's a brilliant piece of insight, sir. Thank you so much for that. Sir, I have a lot more questions for you, but our audience have put up quite a few questions, so I think they get precedence. I'll ask their questions first now.
No
So,
problem.
okay, so okay, I am chartist is a handle, and sir has asked, being the market so much volatile, how to trail as long as possible on a positive trade, please.
Okay. Yeah, that's going to be the most challenging one, right? With the current volatility, what you're witnessing is trending days are very less. But one thing which you can do, if the fall or if the rise is happening beginning of the day around 10 10:30, if the move is happening with the volume, someone is pumping in more funds in the morning, then what you can do is from wherever the rally started, either like in a market is rising or like in a falling, from wherever the rally started, for me, I keep a like in a benchmark of 50K volume on Bank Nifty, 125K on the Nifty. If you are getting two consecutive bars of more than 50K and 125K, I will keep the first candle low if you are a positional. If you wanted to enjoy the entire rally, you feel that this market is going to be keep rising today or it is going to be keep falling, keep that first candle low or first candle high. If you are looking for an upside, first candle low. If you are looking for an downside, first candle high. Keep that as your stop loss. Drive it till 2:30. Usually after 2:30, you will get to see a theta decay and everything happening on Tuesdays and Wednesday afternoon. But if you're a positional player, if you're ready to risk, the initial stop loss levels, then you will definitely see a larger reward. And one more thing, when you're trying to trail it, if you feel already the market has, you kept an initial reward of like 150 points, and the market has already rallied 300 points, then if you feel I can book part of my profit, keep a trailing stop loss at 150 and run it through the day. So that is the best way to do it. But if you're a scalper, once you're buying an option, you bought it at 300, you initially kept your stop loss at 250, the market has moved to 350 now, then you can keep it at the cost. Or if you feel, no, 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 I'm ready to book my profit, then get your like in a trailing stop loss to 340. If it moves to 360, keep a 10-point difference, move it to 350. Then 380, keep it at 370. 400, keep it at 390. Trail it so that as a scalper, you don't lose the rally. And moreover, as a scalper, what I normally do is, if I know that the rally is going to extend, if my trailing stop loss is getting hit at 380 or 390, I will go buy some more quantity, and using my existing profit, I can trail it more. That's the way I will do it as a scalper.
Right. Perfect, sir. Thank you so much for that, sir. Okay. Next, Prashant sir's question is, sir, currently Dow is recovering. Is it just short-term up move in bear rally, or have we reached the bottom in Dow?
I wouldn't be saying this is like in the real bottom getting like in a formed. No, even now, though the like in the market initially had fallen like in a 400 500 points in the negative, now it is close to 180 points in the negative, almost a 300-point recovery. By this time, they should have recovered fully and then getting into the green and then trying to be like an above the level at which they were trading in the Dow futures in the morning. At this juncture, they're still not out of the woods. I would still say this market is definitely going to be testing a lot of the investors or the traders who think that the temporary bottom is getting formed and other things. No. Unless and until you see almost all the commodity stocks and everything has corrected a bit, even the crude is starting to do the correction. If the crude is also falling, and if you started to see the dollar index crashing, then you may see a temporary reprieve happening on across the markets. Till that time, you may see some like in a tradable rallies, but it's not going to be the final one wherein we can completely say this is like in a completely a bullish scenario. The market has formed a bottom. No, to me, I would definitely expect the market to go and retest the lows sometime during this year, and we may get to see some real bad news. Usually, the market, whenever they are in a big correction, they always tend to make a bottom with the real bad news. And I still feel the bad news has not come in. Maybe it can be a Ukraine Russia war, or it can be some other scenario. We might be thinking all those angles, but you will get to see a different news which is going to be triggering the market for a crash or something. So, to me, I'm expecting another round of a crash to be happening this year, and the real bottom might get formed over there, not at this current level.
Right. So that sounds very scary, sir. But all right, me, I am like I belong to the COVID generation that just came about in the stock markets. So for us, that is very scary. But
Like
yeah,
guys, there is nothing to be scared about in this market. I'm telling you honestly, the same feeling which we had it in 2007 and 8 as well. Like, and we thought this is like, even I can say in 2020 I lost, I like, what to say, I lost a best opportunity to invest. Why? Because when I saw the Nifty PE ratios around 20, I was always having a thinking in my mind. In 2007 and 8, I saw the Nifty PE ratios coming to around 8, 9, and 10. I thought I should start my investing only at 17, and when it goes to 10, 12, 13, I will definitely like and try to add more to my portfolio. But I lost it. I didn't like and invest much, and then like and I got lost in golden opportunity to participate in one of the biggest rallies which has happened in the lifetime. But it is again a lesson. We can learn from the mistake, even like in just because Shiva is saying the crash is not going to happen. It may happen or it may not. But always remember one thing. If you're waiting for something to happen, and if you're waiting for a particular level, wait. It may take few years, but I'm telling you that will be worth the wait, rather than be like in thinking that this is what is going to be happening and then like in throwing out money. We do not have much like in a capital like other like in a PE players and the large HNI funds who are going to be getting like in a multiple like in a capital allocation which is going to be thrown into the market. We are not going to have that. We all have like in a small savings which we wanted to like in use it for the future. So whatever the money which I wanted to deploy now, it is going to be for the future. So for that, I don't mind waiting till I get the comfort in where I wanted to invest. If you're looking at a stock which is already having a P valuation of 80, 100, 100, 200, there are some stocks which are like in crazy valuations. Do you want me to invest? I wouldn't. So I would rather get a comfort, let it come to my level, then I will do that. The only stock which is currently in my radar, which I have invested, is the ITC, and I don't mind investing because of the kind of assets, whatever the valuation which is giving me the comfort. Yes, I can. Similar thing which is happening with the Bharti Airtel as well. These are like little long term stories which I'm looking at. But if you are going to be looking at and asking me, Shiva, will you invest in Adani? I wouldn't. With the kind of crazy valuation and whatever the things which is happening, every news is making a big flow, a flow. Even the mutual funds are not ready to invest. So why should I be taking that risk? So you pick and choose what suits you and then stick to that. There is nothing to be scared about in this market. The market is going to be keep correcting, keep moving higher. It is going to be similar to the life wherein you will see a seesaw moves which is going to be happening all along. And if you cannot have a one way go on upside or on the downside. You will definitely see a fall happening and it will stop and then it will again move up. So we will prepare for both.
That's brilliantly put, sir. Thank you so much for that. Okay. So, next question, sir. Ayush Sarkahan, he has asked, how much do you correlate with the statement that zero skill is required to put a winning trade and all the skill is required to manage that trade while one is in it?
Sorry, can you repeat the question again?
Yes, yes. So he basically wants to know ki, so apparently there's a statement that zero skill is required to get into a trade, but all the skill that is required is to manage that trade while we are in it, like when we are actually the trade is actually going on.
So it is like in the, I think based on the statement, it is pretty much like in getting into a casino. You are just like in betting it on any table, thinking that you will win. Okay, and once you bet the table, and then you are thinking that, okay, will I be able to win? Because I think the based on the past 2, 3, or like in a four outcome, this is not going to be giving the result. That means you are throwing yourself the tower, like in getting into the ring without knowing what is going to be the outcome. Then I wouldn't do that. So you need all the skills before you invest, or like in a trade, put a trade. Then you needed to analyze. And what I normally say is, before even you getting into a trade, think about all possibilities. You need to be like in a chess player. If you're making a move, you need to know what is the opponent is going to be doing it, and then what is going to be your counter move. And then, in case if the opponent is going to be moving another move which is going to be affecting you, what will be your third move? So always get to see 2 steps ahead before you put in your trade. So I would absolutely say 100% effort is required before you put in a trade. Once you put in a trade, you know the outcome. Either it can be a profit, or it can be a loss, or it can be like in a cost to cost exit. So only 3 outcomes are possible. So you know which outcome is going to be there, and if it is going to be near to the stop loss, you exit with the stop loss. The whole day the market is not doing anything, exit cost to cost. If the market is moving higher, exit with the 1% or whatever the target which you kept, exit with the profit. That's the way you should plan before the trade, not after the trade.
Perfect, sir. Perfect. Thank you so much for that, sir.
Right.
Okay. Next question is from Ashutosh Kumar, sir. He has asked, yesterday it was showing bearish overnight positions bought, morning was opposite. How to read such patterns? So we already touched upon it, but maybe if you can clarify for Ashutosh sir even a little bit
Okay.
more, sir.
So, Ashutosh, just to tell you, no one will be able to say there are going to be two sides of the coin, right? One would have bought a call, one would have bought a put. That's the way the market operates. It is a zero sum game. One has to gain, one has to lose. Not everybody every time is going to be winning. There would be people who would have bought the calls yesterday, thinking that the market in the last 30 minutes has fallen significantly. Let me go and buy a call. There is a crowd which is going to be doing that. There will be a crowd who will say, guys, I'm totally a data guy. Looking at all the data points with the way the crude is around, and then the way the dollar index is somewhere around 108, I'm pretty sure the US market is going to be falling and I will go and buy a put. There is nothing wrong if you have bought a put yesterday based on the data. Only thing which has happened is the market surprised, the US market didn't fall much, and then you started to see the crude falling pretty drastically, which is a positive, what is it, emotional positive news, which is for the Indians. That is the reason you started seeing a significant jump at the open. All that euphoria immediately died out, thinking that the people who would have taken a position yesterday, they were so confident, guys, you are giving us another opportunity for us to short the market at the higher level. But most of the retailers looking at the gap up, they would have booked the loss at the opening itself. If you believe in the data and if you feel that no, this is like a fake rally and I'm not going to book my loss till this level or whatever it is, and if I'm ready to throw in some more money, that is a risk which you needed to take as a serious trader. Small time traders, definitely yes, they would panic and then exit. But if you seriously believe and if you are able to maintain and think that no, still I can manage this risk, and I'm believing that this market is not going to be out of 10 times, 8 times you may be right, 2 times you needed to ready to accept the fall, and then because if the big money is losing, you needed to ready to lose as well. Imagine if someone would have taken the market lower yesterday. There would have been a lot of big funds who would have pumped in the funds to take this market lower yesterday. They all would be in a surprise in the morning. They all would, some of them would have booked the loss. Some of them would have averaged the position. So which category you belong to? The one which we booked the loss or one who averaged and then taken the market lower? So you needed to identify where you belong. As I told you, everyone looks at the same chart. One makes money, one doesn't. Why one makes money? He understand, okay, this is where I needed to do additional stuff. This is where I needed to exit. If we are not able to take that decision, that's where we lose. I
Beautiful,
hope that
sir.
would have answered Ashutosh's question actually.
Yes, yes, yes. Absolutely, sir. Beautiful. Thank you so much for that, sir. Okay, next question, sir. I think it's one of the most important questions that can be asked. Prashant sir has asked this as a newcomer to the market, where to start from? So for me, for one, I would like to answer this question a little bit. Start with following Siva sir's handle, and from here on, sir, please take it up.
Okay. No, I wouldn't like and say that you needed to follow me. Guys, the best thing is don't try to get into the F&O market first of all. Okay, if you're totally a newbie, that is the area which you should never even consider at least in the next 2 3 years or 4 years because F&O market is a totally a different ball game altogether. It is like in catching a tiger's tail. Once you get into the F&O market, the kind of thrills and like in things which is happening in the market, you will never be able to get out of it. You always wanted to be there at the adrenaline rush. So what I would sincerely say is go through the Zerodha varsity. That's the best place for any newbie to start. Go through the basics. Go through what is cash market and how you need it to be an investor in the long run. If you are thinking about, no, I wanted to make a quick money, quick rich money, then yes, F&O is a space, but it can kill you. It is like in a warning. Okay, so F&O market is not for the newbies. I'm telling you, warning you. Please never get into that without knowing the basics about the F&O. Do your study, at least for 6 months, 1 year. Understand what is F&O first of all. Whether you wanted to be there in the future segment or in the option segment, whether you wanted to be an option buyer or a seller, or whether you wanted to be a swing player or in a straddle player or in like in a strangle player. There are plenty of options available in the market. Choose what suits you. Choose like in based on your personality trait. That's very important. I can never be an overnight player or I can never be an intraday buyer. I can never be a seller. My style, my personality suits to be me, making me a scalper. Why a scalper? Because I cannot hold my positions beyond 5 10 minutes. If I hold my positions beyond 10 15 minutes, I start to panic. When I know that I'm not able to hold my position, then I needed to choose what suits me. Those are the things which I needed you to do it in the initial part of the year, at least for 1 2 years. Take your time, understand your personality attributes. There are very good like members who attend my training who will say, Shiva, like, though I like your scalping, I know I can hold my trade for a longer duration. If you think that you are able to hold your like in a trade for a longer duration, then you automatically become a positional player, and you know the kind of risk which is going to be associated with that, and he's ready to take that. Those are the things which you needed to analyze yourself. And one more thing, just because you are learning something from someone doesn't mean you also needed to become like that. Each of you will have your own attribute, and you needed to know how it can work for you. Never ever try to mimic someone. That will be the biggest mistake which you will commit. You try to find your own path, whatever that suits you. Even you might be learning 1001 concept from different trainers and like in the YouTube stuff and other things, but not everything is going to work. Keep your strategy and your setup simple. See what works for you and then keep refining it. I'm telling you, there is no holy grail. Whatever the system which you are finding, that is going to be the holy grail. And what you needed to do, stick to that one strategy or setup or anything, stick it for a long time. Don't give up just because after 3 months, one fine day you will not get a result. Doesn't mean you needed to give up that system and then move on to another trainer or another setup. That is a big mistake which you will commit. I've been using and teaching the same setup for the past 6, 7 years, and it has been giving me consistent result. The only thing is, I need to know when to be aggressive, when I needed to be light. That is a decision which you needed to take it on your own. So once you do this, you will definitely see a big improvement. And the most important thing, don't try to bring in large capital. Just start with one lot and don't do paper trading. Do with the actual money, feel the emotion, see whether you are able to handle the emotions. And the most important thing, never borrow, never bring in any borrowed capital, never trade for others. And the most important one, always bring the money which you can afford to lose in the market so that you will not have any kind of a fear when you're taking a trade. 90% of the trade, 90% of the traders, when they get into the trade, they all have a fear. Why? Because what if I lose this trade? Imagine if you think that, okay, what are the money which I'm bringing in? It is not going to impacting my lifestyle. It is not going to impact my family or my friends. And I can continue to lead the way I am doing it, then you will not have any issues at all. That's the reason bring money which you can afford to lose in the market and start small. See whether you are consistent over a period of time. Then you can slowly raise it. That's the way you should do it.
Right. Absolutely, sir. Brilliantly put. Thank you so much for that, sir. Okay, so I have a lot of questions right now. We also have a quote tweet from one of our Trinker experts for you, sir, and that is Sagar Solanki, sir. He has been associated with Trinker for quite some time. I think my second ever podcast with on Trinker on Twitter Spaces was with Sagar, sir. He has said, "Hello, Shiva Charts Insiders here. Happy Guru Purnima. My question is how to gain a macro knowledge like you."
Okay, guys. Yeah, Sagar, like, and thank you so much. And Sagar has been following me for quite some time. And glad that he's also doing very good in scalping, which he like and starting to release as well now. So good for him. And one like, and yeah. So people have been asking me, Shiva, like, and you're not even from this background. I'm a hotel management graduate, and then I moved into from hotels. I moved into the healthcare. If you ask me, I do not know head and tail about finance at all. Okay. The same when I went into the BPO sector also, I do not know head and tail. The only thing which I would say is start putting yourself, whichever the industry, whichever the sector which you wanted to be in, start putting yourself, start observing it, start hearing to lot and lot newses like and how all the things work. Till date, I would say like and I'm just like knowing only minuscule. I do not know the complete head and tail. If you ask me anything about Greek, Latin, or what are the Greek setups and other things, I do not know. Only thing which I know is how these guys operate. What are the things which they do, and what are the things which factors these guys look at it. And those are the things wherein my interest lies in. And then I go look at the articles, read these articles, how they have a correlation, how they impact it. And normally, like, and I track a lot of news channels like the Bloomberg, the what to say, the Reuters, the AFPs, and all these business channels, and then you go through the like in a what to say the blogs which is coming on these ones, and these are the things which is going to be helping you in the long run. How each and every element, like in case if I'm a Bank Nifty trader, I needed to know what are the consequences if the rate hike is happening. What are the things which is going to be affecting the Bank Nifty move? Which are the ones which has in the past has affected the move? So I go and look at all these data based on the past history. And one good God gifted thing is like, and I remember these things whenever I needed to like and recollect. So if you are able to have that kind of a knowledge which you can gain and then try to remember for the future, it will help you not only like in looking at the macro data will also help you in the long run.
Brilliant, sir. Absolutely beautiful. Thank you so much for that. Okay, so now, sir, we are kind of reaching our hard stop for the time. But there are some questions which we have kind of discussed already in the podcast. So I'll just go through those questions and just say them out aloud. So Varun Gupta sir had asked, what is the ideal percentage for stop loss and target for any short term trade, which we discussed in the podcast, sir.
Yeah, one is to
Uh,
one. I would go with that.
yeah. Then Anand Agarwal sir had asked, macros across the world are still not out of the blues. So mid-term market don't seems to be making bottom. I would suggest retailers would avoid. What do you suggest to normal, less informed retailer? So I think we discussed to quite an extent that, sir. Okay. What do you observe in Bank Nifty before entering trade? How do you identify momentum? Okay, this one we have not discussed, and I would love to ask you this, sir.
Okay, so for the bank nifty, as I told you, like in case if I'm going for a long or a short, I would look for like in a two consecutive 50K bar if it is on the bank nifty future, and it needed to trade above. If it is on the long side, it needed to be trading above the VWAP, the super trend. The super trend setting is 10-2 on a 3 minute time frame, and I will be looking at like in the WMA and then the PSR. These are the four indicators which I normally use, and the candle should be above this. Once you are getting this four parameters fulfilled, along with the RSI is above 50 to 75, between that range of 50 to 75, and if the open interest is showing me either a long buildup or a short covering, and if I'm seeing a strength, and then the global markets are also like in having a strength, I will be looking to enter at the third candle, either in the futures or in the option at the money or in the money, and using the first candle low on the futures as a stop loss. So try this. This is with this I call it as a two candle theory. Okay, so try it. Out of 10 times, 8 times you will be on the winning side.
Great, sir. Perfect. Thank you so much for that. Okay. Next, Anand Ji sir ka question was, there were many times of demand and supply imbalance in history. This time also there is a great imbalance between demand and supply. How is the
True.
present imbalance different from previous ones? Will the old methods to prevent inflation work this time too? So this also I think sir we discussed to an extent. Yeah.
Like in, yeah, there is
Yeah.
going to be like in the imbalance, and every time there is something which is going to be new. Nobody would have experiences. Even you can go and ask economists. Many economists, if you'd have seen the last 1 year, they would have said, no, 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 all these like nothing to worry. The crude is going to like fall at $50, $60 only, and we will continue to rally. The Nifty is going to 21K by November, the Diwali and other things. The same economists like will come and say now, okay, it is like in a complete doom picture. Now I'm not expecting the market to go beyond like in a 15K. The same like if you'd have seen a couple of days back, one brokerage firm and coming and saying that like we are expecting the crude to go towards like $380. Another brokerage firms and comes and says that it is expected to go to $60. So there is going to be a lot of divergence the way you are looking at the data. So no one will be exactly saying that this is exactly going to be happening. Yes, there will be few predictions and nothing which will go right, but not every time everything will go right. So we just needed to take it with a pinch of salt, and we just needed to prepare ourselves for the best and the worst results for anything which is going to be happening.
Right. Perfect, sir. Okay, next, Sam sir had asked, do these recent time market movements because of the US inflation levels favor option buyers than general times because of the volatility?
I wouldn't say that it like in generally like in favors both the buyers and the sellers. You needed to know which side you needed to be on. If you're a buyer and if you're buying a call and if the market is moving on the opposite direction, then you are not going to be making money. Yesterday night, if you'd have bought a put, then yes, today morning you would have not made money. But if you'd have hold it with the patience, then yes, definitely you would have. Both the way it is going to be. Yesterday when the fall like it happened, many writers would have went and wrote the calls. Today morning, seeing the gap up, they would have panicked and got an exit. But some of the writers would be very smart. They know we will use this bounce also to sell more calls. If it had been in that category, still buyers and sellers both would have made money. It's about how to utilize that opportunity, whichever side it may be on.
Right, perfect, sir. Okay, Avyank sir ka question is, even though the crude is falling, why is the market not moving up with conviction?
It's not only the crude factor, right? It is just crude. What was the fall here? These guys rallied from 60 to $125, and from 120, it has just fallen to $100. That means there is a 25% correction which has happened. But combining that, the crude is falling, but you're getting to see the rupee is constantly like in getting weaker, and still the like in the FIA selling has not stopped because the dollar indexes keep rising. So there are some other factors which is also going to be influencing. It is not only the crude. But compared to the global markets, have we fallen that much? No. The DAX made a 52-week low, but we didn't go somewhere there. The like in a Dow has fallen so much, our markets haven't fallen that much. So we have given the benefit of doubt, but still there are certain things which is going to be beyond comprehension, beyond like in our understanding why our market is not falling or why our market is rallying. No one will be able to say, as long as the like someone has an interest that yes, I'm going to be betting on India no matter what, in spite of the foreign buy like sellers, they keep selling whatever that they wanted to. I'm not going to stop. I'm going to be keep investing my money. When you will see the panicness, imagine the FIs have been like continuously on a selling spree. Why they needed to be on a selling spree when the market is not falling? They know something which we do not know. We think that our market is absolutely bullish. We'll keep trying to support the market. Imagine the FIs are like in every opportunity they are taking the money out of India. That means imagine if I wanted to take my money out, what am I thinking? I'm going to be getting another opportunity where I'll be able to invest my money at a better price. Otherwise, why would I take my money out? Imagine you're holding a stock, and if it is going to be giving you a reward, and if it is keep on moving higher, will you sell that stock? You won't. Why are you selling it? Because you are selling it. You know, I will be able to buy the same stock at a lesser price at a future date. That means there is something which they know, which we do not know. That's the way I would put it.
Right, perfect, sir. So next question is I've kind of saved it for the last one, and this is $1 million question. Balu sir has asked it, and he has said, "Good evening, master. Wishing you a very happy Guru Purnima. I would like to ask a question. How would you train your mind both during winning streaks and during drawdowns? How do you keep your calm?"
That's like an yeah. Thanks for saving it the last, and thanks Balu. And the one thing which I would always say, how people are able to be like in so much grounded whenever I see the big traders who are like in accepting the loss, like in only the retail community keep like in telling. Even in the past I used to complain a lot. Oh no, these guys are manipulating. Today the data was supposed to be bullish, yesterday with so much of fall and other things it was supposed to be bullish. Why the market is falling? I was buying a call and it has been keep on falling. It should not be happening. We keep complaining. But if you look at all these large traders or the big traders who have been in the market, they ignore all the noise. They think that whatever I see on the chart, whatever I see on the data, I will trade for that. I don't care wherever the market goes. I will treat both the upside and the downside at the same level. And even when you like and see those like in a big traders or like the big investors, the stocks would have like in a crash 80-90%. They wouldn't even care a damn about that. Like in the you can call like in the great investors like in be it Vijay Kedia or like in the Rakesh Junjundala or like in whomever you name it, their portfolio would have gone to 1,000 crore and it would have come to 200 crores. Still, they would not have panicked if they're holding the quality ones. Again, it would have gone to 4,000 crore. Again, it would be coming back to 2,000 crore. All they would be doing is an adjustment. Similar to that, they are not going to panic. Instead, they will look at an opportunity. Okay, I'm getting it at a cheaper valuation. Let me invest. When we like, and without knowing anything, when we step into the market, what we normally do is we always try to buy it at the top, and then when it goes lower, we panic and sell it and we gift it to someone. Instead, what we needed to do is we needed to know, okay, I'm ready to hold it till this level, and we also needed to timely, in a timely manner. If you are ready to look your like in a book your losses, you needed to book your profits as well. Don't think that your stock is going to be keep accumulating to X and Y levels. There are stocks which would have gone to astronomical levels and it would have never seen those levels in the next 10-20 years. One stock is like in the DLF. During the real estate, like in what to say, the boom which happened during the 2005 to 8, all these real estate stocks gave you like in 1,000% returns. It would from 100, it would have gone to like in 1,000, 1,200. But once the fall happened after that, it went to 100, 200 range. It never went beyond 300 range. So if it had been a person who would have been holding, buying it at 1,200, you are never going to be seeing that price in the near future. But that doesn't mean all stocks are going to be the same way. So you needed to understand the risk is going to be there. Out of the 10 stocks, 8 stocks are going to be like in falling. 2 stocks can give you multifold returns, but treat both profit and loss at the same level. And the most important thing is you will have phases, both you will have like in a profit phase and then a loss phase. As long as you don't have any expectations from the market that you needed to earn and run it, I'm telling you, you will not be having any pressure looking at your profit rate or looking at your loss rate. There is nothing to cheer about when you are making a huge profit. Yes, you will feel happy, but the same way you needed to take it, I followed all the process till the market gave me a loss. I will accept it and come back on another day on a fresh mind so that whatever the loss which I made yesterday, it is past. Whatever the money which I'm going to be making, it is for the present. And whatever that I'm going to be making it for the future, that is going to be holding good for the future. Treat it that way, you will definitely be happy, not only today, every day.
That's brilliantly put, sir. I really, really can't thank you enough. Unfortunately, we are hitting towards the hard stop of our time, but this was, I mean, particularly amazing, brilliantly amazing. I just don't have enough words to thank you, sir, for taking out your time and having so much patience to explain it. And you actually do explain everything, whatever question, whenever I've asked, it's straight from the heart. I could feel it in your words that you are trying your best to explain it, and that energy actually reaches us. So thank you so much for that, sir. And of course, thank you, our audience, for being here. We had over 500 people tonight listening to us. And again, options, scalpers, Siva sir, thank you so much for that.
Thanks again, man, and thanks to all the Trigger team and everybody. Wish you guys all a luck, and wish all our participants also like an better trading days ahead. Wish you well for the future.
That's our time for tonight, everybody. Thank you so much for being here. Thanks again, Siva sir. Have a really good day tomorrow and a really good night right now. Bye bye.
Bye. Good night, wish you. Bye. Take care.